Welcome back to the Tamron Hall Show. Our next guest is someone very special to me. I want you to meet one of the beautiful people from our TAM fam. Say hi to the audience.
Welcome in. Coming up on today's program, proven advice from the world's top investors. Hey, you are listening to What's Next with Money, a program with smart insights to guide your financial decisions. Let's get started. We're going to talk about proven advice from the world's top investors. And who am I talking about? This is wisdom from Warren Buffett, age 91, and his partner Charlie Munger, age 98, chair and vice chair, respectively, of Berkshire Hathaway Corporation. This is from live note-taking that I did live at the Berkshire Hathaway annual meeting in Omaha. I've been to 4 of them. It's also called the Woodstock for Capitalists. Now, I've also been a Berkshire Hathaway shareholder, Class B shares, since the early 2000s. Now, here are 3 ideas to help you make and keep money from your stock market investing. Number 1, look carefully at the advantages and deficits of any investment decision you're likely to make. Now, this really comes from Warren's partner, Charlie Munger, who's based in LA. He's an attorney, and they've been working Berkshire Hathaway and all these great investments for decades. Now, he really probes the contrary side. His analysis is trying not to prove that a possible investment is a good opportunity. He's trying to ferret out why it might be bad, and he's trying to ID the downside. He's trying to understand the risk. And then Charlie talks it over with Warren, and they have a little discussion and debate about the proposed investment. Now, we can do the same thing with a spouse or a colleague, but I kind of like what Warren and Charlie do, and I need to really do more of that in my own investing. And this can be anything: a mutual fund, a sector ETF, an exchange-traded fund, a tech stock, a value stock that pays a dividend, crypto, currency, real estate, even a house purchase. Here it is stated another way. Lay out the negative case of your opponent. Basically, you're trying to defend the opposite of what you want to do. Now, in my portfolio, if I follow this, and I hope to follow it more, it would eliminate a lot of clutter and very small positions that actually distract my time and investing energy. These are like barnacles that I need to be scraped off my portfolio. Now, my exchange-traded funds, my ETFs and mutual funds, part of my asset allocation, generally don't have that problem. And yes, I do have some individual company stocks of companies that I've researched well, known, either worked for or invested in for a long time. And often on those, I have low entry points, low cost basis. Some of these pay dividends, and I've engaged in extra accumulation of shares during negative market or company events where the stock price was depressed. If you want to know more about how that approach works, check out my videos on Invest in What You Know, and I'll have links to those. But hey, I get messed up adding too much to these little small positions in stocks as market rise. These are stocks or companies that I find interesting, but it's more kind of like to sample it, to track and monitor. And the dollar amounts I'm talking about are not big. And I still maintain a good cash position for my goals. But that's the problem. So I want to use the Charlie and Warren method to look carefully at the advantages and the deficits of any investment decision. So we're talking about proven advice from the world's top investors. Here's number 2. Swing in your strike zone, your circle or zone of competence. You invest in businesses that you can understand. Now, Warren and Charlie buy good businesses at reasonable prices. They just happen to be in the form of stocks. Now, business strategy gurus, the MBA types, might call this concept stick to your knitting. Do what you're good at with companies and sectors and industries that you know. So they do that. We should do that in our investing. Now, for some examples I give in my loser stock video, also linked below, is the idea you don't hit at every pitch. You know, I care about pattern recognition. I wait for the price and the setting to come to me by setting limit orders. In my 2 Invest in What You Know videos, I share how I approach this and how every investor, all of you watching, you have special life and work insights in industry sectors and companies. Now here's number 3. Exercise emotional control and emotional attributes to cultivate patience and opportunism. Bottom line from Warren: be fearful when others are greedy. Be greedy when others are fearful. Now, I've got a video on financial insomnia that addresses some of those market fears. And I share my anguish and how over time I developed and grew investment emotional maturity to be a more effective and courageous investor using a margin of safety to build wealth. And speaking of margin of safety, this concept comes from, and by the way, I've got probably a dozen Warren Buffett Charlie books, but this is one by Benjamin Graham called The Intelligent Investor. Now, I've read this cover to cover, and it talks about margin of safety. It talks about many great concepts in buying securities. But I went so focused on this that I created note cards to get this into my system. So I basically outlined this book. And I think this is one of 3 or 4 of Warren Buffett's favorite books. And this was written by his finance professor, Benjamin Graham, when he was at Columbia University getting his graduate degree. So emotional maturity is a hallmark of top investors who not only do not panic at odd market events, they have the capacity to consistently stay unpanicked. From that vantage point, they see signs of opportunity as well as caution. So if you're getting value from these videos, please hit that subscribe button and don't forget to hit the like button. It helps us move our content to more folks. It's free and non-commercial. Now, the top investors are time-tested, have a sense of history, values, as well as perceive and distinguish the madness and the wisdom of crowds. They know the difference. Some have revolutionized and made the opportunity for us for broad-based wealth building and to right the wrongs of historic wealth gaps, made possible by lowering the cost of investing, increasing access, providing disclosure, and just plain dispensing long-term life philosophy, life and investing wisdom that they've lived. They astutely observe trends, what constitutes value, and often operate in a different emotional gear and maturity level than those of us with less investing experience. They take the long view, follow regulatory rules and ethical principles. Plus, they've survived the ups and downs of the markets, and they read constantly. And folks, I do that too, I admit. That reading, interviewing, training, so much of that, and I gain this from the wise people, the other great investors, that goes into these What's Next with Money video programs. To date, we've produced 50 and we're growing. So top investors have learned and thrived through many years, many investment cycles, geopolitical and economic upheaval with staying power. So be sure to hit that subscribe and that like button, and don't forget to share. Remember, new episodes of What's Next with Money are posted on Thursdays.